Hello traders, welcome back to another episode of the Technical Breakdowns. So today I'll be taking you through a couple of markets. They're very interesting things that are happening both from the technical aspect and from the fundamental aspect. But fundamentally, last week, Jackson Hole, the Fed chairman, is quite clear. He's not slowing down on hiking rates. What are the markets expecting? I think there's a big opportunity to make money on the way down and back on the way up. That's what I'll be sharing with you guys. And let me just go down directly to the chart breakdowns. We have been actively watching markets, actively stocking for opportunities, and that is what I'm going to share with you today. So in the next maybe a minute or two, I'll start off. I don't have that much time to really wait for everyone to join because I have other appointments to attend to. We share our technical breakdowns and we also share our fundamental outlook. Obviously, you can track our expectations and how we're breaking down markets, but I think what's more important for you to become ultimately profitable is to understand the whole thought process on how to do your trading. And I think for you to have that chance, you need to join our programs. So hopefully we'll see you guys joining, and for those who have joined and have graduated, some who I know personally I can see on the list, I hope you're doing well and you're having a wonderful time wherever you are. So let me just go directly down to what is happening in the market. I think markets have been quite interesting over the last few weeks, or let's say even this year. I think this year has been quite interesting. Thinking about it from a market's perspective, in November of this year, the Fed's committed to fighting inflation, and that has brought in some changes in the direction of the market and in what we expect, some changes in fundamentals obviously, and they're being reflected by the price. If you're tracking price, I'm sure you'll see different asset classes are trading relatively different from where they were trading some time back last year. So from a period of low rates, now we have officially entered a period of high rates. For the last 6 months, I think rates have been going higher. That has been the trend. Any path towards a slowdown? Not yet. We can't see one yet, because the main reason why rates have started going higher is because of where inflation is, and the main reason inflation went higher was because of COVID, and COVID came as a result of what happened in China. So for you to understand really what's going on right now, you need to backtrack all the way to what happened in 2020 and look at the evolution of that. 2020 we had a dip 35% in the stock market. We then had a recovery which resulted in about 100% move from the official bottom. I think the Dow bottomed at 18,000, topped at about 36,500, and now we've gotten again another collapse. We are trading at 32,000. I still think there's some downside, so I'll share with you why I think there's some downside, both from a technical perspective and from a fundamental perspective. So to start us off, I think, let me just go directly down to the charts. Anyone who's joining will find us on the way there. So if you look at charts, different markets, before we just go down to the chart breakdowns, I think last week on Wednesday, the Fed chairman, Jerome Powell, made it clear that he is not backing down on raising rates. He pointed out the value of looking at history. The last time we saw inflation as high as we have right now is in the 1970s, when we had the oil shock, which was brought about by the oil embargo which happened between Israel and Iraq. So you can track that back again and try and understand what happened then. Now we've gotten another shock this time, but this time the shock came about as a result of COVID. But markets have gone very high. Inflation has gone very high, and you had to fight inflation, and one of the best ways to fight inflation is to hike rates. Now with inflation at 10%, rates are at 2.2, I think 2 to 2.2. Rates are normally at 2 to 2.2 and inflation is down at 2-3%. So markets are pricing in a rate hike to about 4.5, 5%. Probably that's where we will see rates topping. We're not sure also of that. We have again to watch what is happening with inflation. I think the last figure that came out was a bit lower than the previous one, but not that much lower. The magnitude also matters. So I think Powell made it clear that looking at history, he had to hike rates aggressively. In the 1970s, a man called Paul Volcker was the one responsible for bringing down inflation, and he hiked rates to as high as 20% for him to combat the inflation of the 70s. We had a very strong recession during that period, 70s to 80s, but that was the short-term effect of bringing down inflation, but in the long run, the American economy came back strongly. Now, this time, I don't know how it will work, but looking at history and learning from history, we can obviously expect rates to still go higher, and we want to see if inflation will come down, ultimately, and how fast it will come down, which is also very, very important. Now, turning back to markets, I think markets have made it clear that they're also going down. Risk assets from Bitcoin to stocks to currencies. I think the dollar has been the only thing doing well, and obviously why it's doing well is as you hike rates, what you're basically doing is you're discounting earnings for everything else and increasing earnings for holding currencies. So if you're holding a currency, obviously you're getting a yield from the higher rates, so it makes sense, for the dollar to keep moving higher, unlike many other currencies which have been sliding low. I think it's a relativity game if you try and understand it well. But looking at markets, I'll pay attention to the markets that I normally trade. So I look at commodities, indices, and currencies. Not all of them, a subsection of the few, but I think correlation-wise, much of what is happening in one market somehow paints out in the other market. So as much as you're not looking at any of the markets I've mentioned among the three, if you have any commodities, I'm sure the trend is more or less the same what is happening on my end. If you have any index, I'm sure the trend is much or less what is happening on my Dow. And on the currencies, if you're trading the major currencies, I think the trends also are much the same. So looking at gold, if you want to understand what's going on in gold, you have to go back at least to the weekly chart. So that's where I'll start my analysis. I look at what is happening on the weekly chart. So some time back, gold topped at the 2000 level, started a decline lower. You can see the decline clearly mapped out. We've gone down all the way to 1700. We had a retest of 1800, and right now it's quite clear markets are still moving down. So where do I expect gold to settle? I'm looking for 1650 as my first target. I'm looking for a clear break of 1700 and a drop to 1650. 1650 is taken out, and I'll be looking for 1600 and ultimately 1550. I think gold could find a bottom at 1400, 1500. That's why I think the trend could start changing. Maybe we'll move into a sideways movement for some time. Maybe we'll have a strong comeback also, but I don't see also a case for a comeback depending on how fundamentals are developing. But for now, I think gold still has some downside. On the daily chart, I have a very beautiful setup which I've been holding now for quite some time. So if you just look at what is happening on the daily chart, I think our internet is not so stable. So yeah, it's a very simple pattern. Simplicity ultimately wins. So just a basic channel, and you can see clearly markets are moving down. So I'm looking for 1675 here. Here I'm a bit conservative first, and then if 1675 is taken out, I'll be looking for 1650, which I mapped out, and ultimately 1625 before 1600. So I have a very clear pattern that I use to observe critical levels in the markets. I don't just pay attention to all levels, I pay attention to some specific levels in the market. On the 4-hour chart, there isn't much that is going on for me, at least from my perspective. If you're not in this trade, I don't see any beautiful risk reward for you to come into, or any beautiful setup, at least for now. You may have the direction right. If you're not in it, then it pays to wait at least for a good comeback probably. Maybe if we get a correction from this to 1750, those zones, you could get an entry, but I don't see it. Honestly, I don't see it. I just see a collapse to 1700. Maybe after that we'll see a correction, and then that can prove to be a good entry for someone who's not in. But if you want to chase markets, then you can do that, but we don't normally advocate for that. Our style of trading is a bit systematic. We focus on specific patterns, specific entry levels, and specific exit levels. That's why we're able to generate money consistently. Otherwise, if we're just chasing what's happening in the markets and trading on opinions, it becomes extremely hard to make money consistently. Next, I look at US oil. So US oil has been going up for quite some time, but I think it was quite clear. If you just go back to the weekly chart, the top was found at $120 a barrel. That's where oil topped. So if you just go back, you can see clearly this was about $120 a barrel. Markets rejected the level, printed this beautiful engulfing, and that was the start of this decline to $90 a barrel. Do I think the move is done to the downside? Not yet. I still think oil has some downside. Ultimately, actually, I think before the end of this year, oil could trade as low as $70 a barrel, pegged on where rates are going and how rates are moving. Currently though, we've seen a rejection of 90 and probably a correction to 100. I wouldn't be surprised that much by that. but I don't see any weekly scenario where markets close above $100 a barrel. I just don't see it, at least for now. So I'm very keen on $100 a barrel. On the daily chart, not much of a pattern, but at least some crucial levels that I can watch. So you can see clearly this is the decline I've been talking about. We officially rejected the S2 level. We've started moving higher, rejecting S1. I think we could come back, test 100. That's why I'm looking at 100 as a very good level. But if we don't go back to test 100, then we could still decline to $80 a barrel. I think the direction is to the downside. What's currently happening is a pullback. So if you just go down to the daily chart, to the 4-hour chart, there's this beautiful third bounce. So 1, 2, 3, we got a rejection of $95 a barrel. I'm just waiting for a clean break of this 91, 92, and then I'll be short looking for 85 and ultimately 82.5 on the way to $80 a barrel. So I think there's a huge decline coming into this market, and if you look at what other markets are doing relative to this one, it's the only market which was not priced in that collapse. So you can just wait for it over time, but you have to know how you'll time the entry and the exit. For me, I have a clear way of doing that, so you have to think about it from how you look at markets. Next, I look at the Dow. So the Dow last week had a very, very beautiful setup on the weekly chart. This was a one-way bet for me. We had a beautiful third trend line bounce, so 1, 2, 3. We had a nice shooting star formation which suggested a collapse, and you can see the collapse just came in after Feds spoke at Jackson Hole. On the daily, I had this beautiful setup which was just completed. So we had 1, 2, 3, nice move. I was looking for this target as the first one. I'm very keen to see what will happen. I'm expecting obviously a break of this, not obviously, but I'm more inclined to expect a break of 32,000. I think there's a high chance the Dow could sell off to about 28,000, 27,000. That would mean about a 30-40% collapse from where we were originally. I don't think that's so bad, pegged on where rates are going and how the economy will be doing relative to where rates are going. On the 4-hour chart, again, not much of a setup that can be capitalized on. So that's why you really need to understand the connection between things and how to position yourself. So you can see clearly you had this drop, a pullback, and then this beautiful drop all the way to 32,000. We've rejected the level. It looks like we'll come back to retest this fair value area 32.5. But if we break this level, then I'll be looking for this S2, S3 level, 31, 31.5 as my ultimate targets for this week. The pound has been moving lower as the dollar has been moving higher. The pound has been shedding gains also. It's been going down. The pound is currently trading at 1.116. So the setup there was quite clear. If you just look again at the weekly chart, I think after a break of 1.2 and a good close, it was quite clear 1.15 is the next level. And if 1.15 is taken out, then we'll be looking at 1.10 as the next ultimate level on this market. On the daily chart, we had this beautiful third bounce again, and you can see a very beautiful move to the 1.15. So some of these trades were quite basic, quite evident. If you just paid attention, understood trends, understood the fundamentals, it was quite easy to make money from some of these patterns. So this is the daily, the 4-hour chart again. You can see a drop, a correction, a drop, a correction again, and then we've officially gotten a drop. So I'm looking for a drop to 1.1625, the S3 level, probably a correction to 1.175, a retest of that level, and then a continuation to 1.15. So that's what I'm watching when it comes to GBP USD. Finally, I look at Euro Yen. The yen has been moving, has been quite weak relative to what the dollar has been doing. That has resulted in a very high move on Euro Yen, all the way from 125 to trade as high as 145. We've now gotten a correction to 135. Maybe we'll be hitting 155 soon. Who knows? As long as we're above 135, I think we're inclined to be bullish. On the daily chart, however, we have a different pattern which dictates that we should be a bit lenient to see what will happen, or we should be a bit patient. That's what I'd say. So we had this drop, a correction, then we got this drop, and now this looks more or less like a correction. But remember, on the grand scale of things, this could also be the impulsive move, and this could be a correction. Now, how will this be confirmed that it's a correction? Once we get a break of 137.5, 138, 139, and a break above this trend line, then I think that's a clear indication that 150 is the next level that we should be watching for in this market. But if we fail to go above these levels, then we could easily sell off to 132.5. So it's not quite clear where this market will go, at least from my end. Using other tools, maybe someone can see a clear path to profit, but not for me. I think the fundamentals are a bit confusing. moving, as much as the technicals are, it becomes very hard to make a decision when markets are doing that. So looking at it from the 4-hour perspective, no clear pattern again to execute, no clear setup. So it's just a question of being patient and waiting for something candid or something solid. But I think some crucial levels to watch for the direction: 140 breaks, I think the upside is confirmed. 135 breaks, I think the downside is confirmed. It's just a matter of which level will be broken first. Finally, I look at Bitcoin. So there have been many people who've been paying attention to Bitcoin when it was moving higher. Right now, I've not seen anyone call me and ask me what's happening with Bitcoin. So I'm still waiting for it to come back higher for people to start asking. But I think this is the right time to actually stack up on some of these things. If you really want to make money from them, you buy when others are selling and you sell when others are buying. Anyway, looking at Bitcoin from a weekly perspective, I think with where rates are going, with inflation where it is, no one is likely to hold such an asset, at least for the economic cycle where it is right now. Not many people are looking to make money from this asset. So you can see clearly it's been just on a steep decline. The last 2 weeks have also been quite bearish. So if we continue the bearish momentum, we're looking at 15,000, 10,000. I think 10,000 will ultimately be the bottom. That's where so much pain will have happened in the market and some people will ultimately leave the market. On the daily chart, this market has been following very, very beautiful patterns: an impulsive move, a correction in the form of a flag, an impulsive move, a correction in the form of a flag, and then again an impulsive move. So you can see clearly an impulse, the correction, an impulse, the correction, an impulse. We've gotten the correction, and now we're in the impulsive move again. So first target after the break of 20,000, I'm looking at 15,000 to see what will happen. After a break of 15,000, I think we'll go back to 10,000. If you want to buy these coins, don't really try and aim to time the markets. That's something that is very, very difficult to do. I think what you need to understand is there are very good price ranges to start buying. For example, I think anywhere between 15, 20, anywhere below 20,000, that's 20 to 100, 10 to 20,000 is a good price, because let's say in the next cycle it touches 100,000. If you bought at 20, that's a 5x return. If you bought at 15, that's a 6x return. If you bought at 10,000, that's a 10x return. So it's all about just knowing where to come in and where to exit, because the next target that I'd have on the upside for me would sit at around 100,000. I'm not as optimistic as those who are calling on 200,000 or 250,000. I think 100 is a bit conservative on this market. Finally, I look at the dollar. So the dollar is the king right now. As rates have been moving higher, the dollar has been moving significantly higher. If you just go to the weekly chart first and see what's happening there, you'll see clearly that the dollar has been on a straight upward move all from November when it bottomed. And this was when the Fed started pointing out that they're taking rates higher. So we really need to understand the fundamental inflection points in relation to the technicals. So you can see clearly we've been on this upward move. We're approaching 110. I think after a break of 110, I'll be looking for 115 on the dollar. If I go down to the daily chart, you can see clearly the pattern. It's quite basic again. First, second, third bounce. We're looking for 110. I think 110 is quite conservative, 112.5 maybe. But after that level, we'll be looking for 115. I don't see any scenario of the dollar starting to decline yet. I think it will start declining after we have a clear pathway to a change in fundamentals. That does not necessarily mean the fundamentals have to change, but I think a point comes when markets just say this is enough and we can't move higher than this, so we have to deal with this problem in a different way. When that time comes, we'll change our narrative, but for now, I think it's quite clear where the dollar is going. Up is the direction. Okay, so I don't think there is any question really, because I can't see anyone typing, in fact. So I think I'll stop there. I'll see you guys in the next one. I'll be doing this again next week on Monday. Caleb will be doing it on Wednesday. He'll share with you his outlook on different markets. He does not trade all the markets that I do trade. But I hope you'll have a profitable week. I think the only fundamental to watch out for this week is Friday. We have non-farm payrolls. Other than that, I think everything else is quite clear and easy to do. So I'll see you guys, catch you guys in the next one.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.